Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1686A, and today's date is October 10th, 2018, and the title of the episode is, As the World Decouples from the Fed Note, the Transition is Happening Quietly. Let's get into the economic collapse financial news. Now, the central banks, they are out there, and it's like they have a bullhorn, and they're screaming on the top of their lungs that there's a great depression headed our way. And they keep telling us that it's going to be awful because of the U.S.'s fiscal policies, basically what Trump is doing. And they're continually telling us all of this, where they're telling us that if this keeps up, the entire system is going to collapse. What's actually happening right now is that the entire economic system is quietly moving to a new system. We are transitioning right now, right before our eyes. It doesn't happen with a snap of a finger. Everything has to be prepped. Just like the central bankers were prepping everything to be moved away from the United States. And they did this very slowly and methodically. The difference here today is that there's not that much time. Trump has been in office around 2 years or so. And again, the central bankers had many, many years to move everything away, and to bring everything back in just a year or two is a very difficult task, and most likely it can't be accomplished within this period of time. What can be accomplished is setting everything up so when we enter this transition, we can start moving things back here. That means getting rid of certain deals, giving tax incentives and things like that to make sure that the companies do come back, that they promise to come back here. Some of them will, some of them won't, but you need to make the U.S. prepared and ready for this major, major transition, which we're going through right now. The economy is breaking down very, very quickly. And if we look at Sears right now, we can see that Sears, they've been putting off bankruptcy. They've been bailed out with a lot more debt. And it looks like it's time for them to go bankrupt. And we're going to see a lot more stores go bankrupt as we move forward. But what's very interesting, as we know, the IMF is out there, and they're continually telling us that something bad is headed our way, a severe recession or the second Great Depression. Now, the IMF, they came out with another global economic forecast, and for the first time since 2016, saw the DC-based organization cut its global growth forecast. They are warning now that if we enter this Great Depression, we could slash the U.S. public wealth by $5 trillion. At the same time, governments around the world, many of which face similar dangers, do not clearly publicize their overall net worths. The IMF said in a new report, noting that few governments know how much they own or how they use those assets for public's well-being. Now, what's very interesting about what the IMF is saying here is they're saying that countries, they should start to look at their assets and see what they own and how much they owe. And what they're saying here is the following. Knowing what a government owns and how they can put their assets to better use matters because they can earn about 3% of GDP more in revenues each year and reduce risks. The IMF right now is desperate. They want countries to push austerity. They want countries to look at what assets they have, maybe use them as collateral or sell them off. And the IMF right now is looking at different assets. And the assets they're talking about is public infrastructure, such as roads, bridges, sewer pipes, as well as the money governments have in the bank, their financial investments, payments, all of it that's owed to them, or these different assets that they can use as collateral. The IMF is saying that natural resource reserves in the ground are also part of the assets, something that is particularly important for natural resource-rich countries. But assets also include state-owned enterprise such as public banks, and in many countries, utilities such as public electricity and water companies. They want countries now to use whatever they have to put this off, because they know that their system is imploding very, very quickly. Remember, it wasn't supposed to go this long. We were supposed to have an event already. And they know that this is going to crash and it's going to implode on itself. And they're trying to get countries to stop this, to put it off a little bit longer so they can get someone in place where we can have an event. And we see that the central banks are very, very worried about this. I mean, if we look at the U.S. right now, the United States has been in a decline for nearly 4 decades. And so has many other countries because the central bank system doesn't last that long. Now, the U.S. financial crisis has sunk by negative 17% in 2016 as a share of GDP. The federal mortgage giants like Fannie Mae and Freddie Mac, which the government took over during the crisis, have lent a staggering amount, 44% of GDP, to the private sector. But the biggest source of risk comes from state and local government retirement pensions, which we discussed many, many times before, which can lose money when Wall Street sinks, meaning the shortfall has to come out of local government budgets, towns and states that have to cut spending elsewhere, creating a drag on the economy. So we have a lot of debt. The global economy is imploding. They're saying it's because of what the U.S. is doing. And this all started in 2016 when Trump came into office. I mean, it seems kind of coincidental that all this just so happened to start at that time. No, what really happened was it was always declining. If you remember, we reported on this many, many times before. Every time the IMF put out a forecast during Obama's term, the forecast was always 3.8, 3.9, 4% GDP, and they always lowered it as it came to the real number of the GDP numbers, and they adjusted. But the initial report, where it went all over the mainstream media, everyone was like, wow, the economy's doing great. This is fantastic. And then we came in at 2%, 2.1%, sometimes 1.9%. It was absolutely awful. The economy has not improved. What they've done was they manipulated the statistical numbers to make it look like the economy is improving. That's all they've been doing. Nothing else. Everything else is status quo. They haven't done anything else. What Trump is doing right now, and the Patriots, they are preparing for this major transition. The central banks are worrying and they're panicking right now because they know their system is imploding on itself. They also know that Trump continually contradicts the Fed. And they're telling countries, listen, we need your help right now. You need to look at what you have, your assets, investments, whatever you have. Use whatever you have to save the system right now. Don't let it implode, because if it does implode, a lot of people are going to get hurt. Yes, a lot of people are going to get hurt because this is a central bank system. A lot of people are going to get hurt no matter what. If we had someone else in office, we'd be heading into some type of an event war where the central bank was going to reset everything after the war. You don't think a lot of people were going to get hurt during that period of time? Yeah, the population was going to be reduced. The entire system was going to be reset. It was going to be reset in another central bank system. Today, we don't have an event or war. Today, the central banks are floundering, trying to figure out a way to blame this gigantic disaster on somebody else. This is what they're trying to do here. And I keep using Trump, with tariffs and tax cuts, but it's not working because Trump is countering this at every turn, saying, listen, I'm using your manipulation. What are you going to do? Say I'm manipulating the data? Then we'll go back in time and say it was always manipulated. So they're never going to use that argument. So there's nothing else they can do, and they're scared. They're afraid. Now, nations right now, they are building alternative payment systems. We know that Russia, they've created theirs. China has created the SIP system. We know that Europe is going to be creating something outside of the SWIFT payment system. Germany has mentioned this also. And we see that Iran and many other countries, they're also going to be doing this. And they're going to be using these alternative payment systems. And this is the slow transition that we've been talking about. And as each country moves away from the Federal Reserve note. Now remember, the Federal Reserve note is separate and apart from the U.S. The Federal Reserve note is the central bank debt note. Nothing to do with the people of the U.S. This is not the system that we wanted. This is not the system the founding fathers wanted. So countries are moving away from the Federal Reserve debt note. China's doing this. Russia's doing this. Iran, Syria will be doing it. We see Venezuela, Argentina, Brazil. Many of the countries are going to be using their own currencies. They're dropping the Federal Reserve note. African nations are going to be dumping the Federal Reserve note. This is not a U.S. dollar. This is a Federal Reserve note. Look at the top. Yes, it might have the U.S. there, but this is a debt note owed back to the Federal Reserve. And a lot of the countries around the world are decoupling. They're selling treasuries. They're doing it very slowly. This is how it works. You can't dump everything at once, or you're going to lose your investment. It's almost like an investor who has, say, 1 million shares, and they decide one day, let me dump 500,000 of my shares. Well, what happens to the other 500,000? As soon as you dump 500,000 shares, all of a sudden, everyone looks at this and says, whoa, you just dumped this? The stock price of those shares are dropping. Other people start to sell, and everything else that you're holding starts to fall apart. This is why they're not going to do this. They do it very, very slowly, very methodically, so no one realizes what's going on unless you're watching and checking this every single day. And that's what we've been doing. And we've been watching this. This is a slow burn. And this is all in preparation for the transition. And you can see at this time that Trump keeps taking shots at China. Trump keeps taking shots at the Federal Reserve, because the plan here is to do away with the central bank, to put everything back to an even playing field, because the United States was being prepped for the globalist operation. And this is why Trump was out there with all these different trade deals saying, listen, what, on the tariffs, and why do we get such a small percentage? Because this was being done on purpose. They didn't want an even playing field. And now it's time to make it an even playing field and to set up bilateral trades instead of the globalist trade system. And this is what is being done right now. This is the transition. And it's going to get bumpier. It's going to get a little bit harder as time goes on, because more and more of it will be transitioned. And when they get to the meat and potato of, currencies, getting rid of the petrodollar, getting rid of the Federal Reserve note, that's when people are going to really notice it. So we are moving through this transition right now at a very slow pace, putting everything in order, crossing T's, dotting the I's, making sure that the U.S. is prepared for the next system. And that's what we're seeing right now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.